Good morning, everyone, and thank you very much for joining me. This is the morning market review. My name is Russell Shaw. I'm a senior market specialist at FXCM. Today is Tuesday, it's the 5th of September, and my email address rshaw@fxcm.com. Just want to go ahead and bring up the disclaimers. We'll start off with the high risk investment warning. All right, here is the market commentaries disclaimer. And just finally, market scope and trading view will be our references. We'll go through to trading view, just do some exercises there. Want to thank everyone for joining this morning. Good morning, Kim, James, Howard. Lovely to have you on the webinar as always. And thank you everyone for signing in this morning. All right, so what we're doing here is we're looking at the real rate. This is the daily chart of the real rate, and I just applying some technical theory to it, and it looks as if the pattern, the technical pattern, is a flag. So the idea behind a flag, it's a continuation pattern. We'll really have to see how this pans out to see. I don't know if there's much more yield there. I think that the yields are looking I think bonds are looking really cheap at the moment. So, but just in terms of the measured move, you can see that there is a sort of a breakout suggested. I'm not sure if we're going to see that, to be honest. In fact, I would be surprised if we sort of see the real rate move up to 2.25%. Nevertheless, the technical pattern does seem to suggest that we watch this. And the reason that we want to watch the real rate is that there are some important correlations between the real rate and the instruments that we trade. So the first correlation we'll take a look at is the US dollar, just to see what kind of correlation there is. So we'll add the US dollar just underneath. You can see the real rate move up there. You can see the US dollar move up there, right? Some sort of correlation. You can see the real rate move down there. You can see the dollar move down there. So there is a correlation. Let's put in the correlation coefficient just to see how strong that correlation is. So you go through the indicators, just type in correlation coefficient and put in US dollar. And we at a very strong 79%, so 80%. So basically what it's saying is that the US dollar, the FXCM US dollar basket, and the real rate are 80% correlated. As one moves up, the other one will move up 80% of the move in the same direction. So we definitely want to keep an eye on what's going on with the real rate. If the rates continue to elevate, that's going to have an impact on us as traders. The dollar would probably be elevated there as well. Well, if the dollar's being elevated, what's going to happen to, say, gold or the euro or to cable? So what we can do is we can take a look at, say, gold versus the real rate. Let's see what's happening there. So what we'll do is we'll just double click on US dollar. and let's just put in XAU USD. So now we're looking at the precious metal, right? And we'll use the FXCM instrument here. And what we can do is we can take a look at the correlation coefficient as well. XAU USD. Okay, and here we've got a negative correlation. So where the dollar was a positive correlation, this is a negative correlation. It's actually come down to 30%. So the move's perhaps not quite as in lockstep, but take a look here. There's the move up. There's the move down. Right? There's the move down. There's the move up in the gold price. So we've got that inverse correlation. So you can see that the real rate now filters through to dollar. Well, dollar filters through to all sorts of instruments. You can see that gold is affected as well. Let's take a look at NASDAQ, see what the real rate is with the NASDAQ. If you recall yesterday, I suggested there was some ambiguity there. Let's see what the correlations are suggesting. All right, let's take out the drawings. Let's take XAU out. Let's put in NAS 100. Okay, and let's change the correlation coefficient to NAS 100 as well. All right, we've got a 37% inverse correlation, or minus 37%. It's telling you that there is some sort of relation. It's not particularly robust, not particularly strong, but there is something to be gleaned from this. Take a look here. Real rate moves up. Okay. NASDAQ 100 moves down. Remember we did the math yesterday? We did the time value of money. Okay. Here's the real rate moving down. What's happening to NASDAQ? Real rate is moving up. So you can see that inverse correlation there. Remember what we said is this could be a flag. We're still waiting to see if it is, but if it's a flag and there's some sort of upward breakout here, well then we've seen that positive correlation with the dollar should lift the dollar with it. We've seen that inverse correlation with gold should take gold down with it. We've seen the NASDAQ, we've seen the if the real rate breaks out, very possible to see NASDAQ break down. But there's a corollary to this. The corollary is if the real rate comes down, then we should see a tailwind for the NASDAQ. We should see a tailwind for gold. We should see a headwind for the US dollar. So one of the exercises that we've got to do is we've got to keep an eye on what's happening with the real rate, because it is going to have an effect on the instruments that we trade. And we can look at the technicals, sure, but I think if we can marry the technicals with that underlying fundamentals, particularly which way the real rate is going, we're really going to be we'll have a strong base. And one of the ways we can measure real rate, let's take up the correlation. Let's take out NASDAQ. What we can do is we can add in some indicators. The indicators will help us. So indicators that are like using would be the 5 and the 10 exponential moving average and the RSI. So let's throw those in and see if we can glean anything from that. So let's start off and put in the 2 moving averages. So just click on indicators. James, you don't have to download TradingView. You just go to tradingview.com and register. Okay. If you don't have a paid account, it's okay. Then you're going to be hit with ads, but it's a very useful platform. Even the free version, extremely useful. And I would suggest that you just go to tradingview.com, just go ahead and register. What was I going to do here? Oh, let's add in the exponential moving averages. Just double click on exponential moving average twice. And just what we'll do is we'll adjust the settings. So just go on settings, change the first to a 5 period. I like making the 5 period green. I just want to click, right click on that 5 period, and I'm going to say visual order, bring to front, just like having the moving average at the front. Click on settings for your second, okay? Then just make the length 10. And I like making the 10 orange. Okay, and again, let's just bring this to the front. Okay, and you can see the danger here. This is a trend following indicator. You can see the danger here. What I mean by the danger, we've got the bullish crossover here. We've got a bullish crossover, the green crossing over the orange. Well, if angle and separation is maintained here and it carries on moving in that direction, go back to the correlations. Correlations were suggesting a tailwind for the US dollar, headwind for gold, headwind for NASDAQ 100. Let's just add an RSI, a momentum indicator here as well. So just click on indicators, click on RSI, or type in RSI, and then just click on relative strength index. And you can see that the RSI, let me just show you the settings that are used here. Again, they're not magic settings, it's just the ones that I prefer. I like using a 10 and the source, a median, which is the high plus low divided by 2. And well, which side of 50 is the RSI on? And it's on the positive side of 50. It's above 50. Well, that's the bullish side. So let's change this to blue. Let's just make it as so. So now we've got a very good picture of, we can see that the real rate seems to have a support to it. Moreover, it looks to have some sort of underlying bullish momentum. Okay, we've done the correlation coefficients. The correlation coefficients, just to reiterate, if the real rate is moving up, that would we expect take the dollar with it. If it takes the dollar with it, it should push gold down. It should push NASDAQ down. If dollar is moving up, pressure on the euro, pressure on the pound, pressure on the Aussie, right? So you can see how the analysis here is top down. We're really having a good top down analysis here. Let's go through to market scope, and I'm just going to bring up the US dollar on market scope, and we can do some analysis on market scope. Okay, here it comes. I beg your pardon. All right, take a look at the US dollar is strong. Look at it in zone 1. It's right between the upper red, the upper blue. Yesterday, what did we say? Yesterday we said it's in zone 1. We said look for the support. So look for the support. Well, it took some time, but we did get that move up. The idea was we'll just watch for the crosses. Well, the crosses came in down here. Okay, around about 2 o'clock ZA time yesterday, around about 1 o'clock UK time yesterday, and we got the dollar moving up. Why were we looking for that? Real rate. The real rate's looking quite strong. Yesterday is an unfair day actually to have sort of set the task, because it was the Labor Day long weekend in the US. So nevertheless, the Forex markets were open, and there was some movement in the greenback. All right. Another thing that we looked at yesterday, just to sort of continue the analysis. Remember, we're looking at dollar now on the back of real rate. Very important not to lose sight of the chain of causality here, right? The cause and effect. What we've done is we've looked at the trough, we've looked at the peak. Then yesterday we suggested, well, this could be a higher trough. It's a very strange. It's just a 1 week lower low, lower lower low, lower higher, but it's made all the difference in terms of this candle, this week's candle. We've got the higher peak here. Okay, it's a very strange sort of pullback, a 1 week pullback, but it does, in the strictest sense, show a higher trough followed by a higher peak. Dollar is looking really strong at the moment. Well, that's gotta worry us. Why has it gotta worry us? Because the dollar is a safe haven. If the safe haven is looking strong, what's the risk market is it going to topple over, or will we see some sort of capitulation in the greenback? Well, I think we can only really judge if there's going to be capitulation if we watch the real rate. And I think the real rate rolling over here will tell us something quite powerful. Okay, so you can just see the steps that we've used. We went from the real rate, we looked at the correlation coefficients. From the correlation coefficients, we went and we took a look at the real rate using indicators. Then we went down to the to market scope and looked at the zone, and the zone on the daily chart looking very strong on US dollar. Let's take a look at the zone on the euro US dollar, and not surprising, it's in zone 3, the lower blue, lower red. Let's just take a look at gold, and we'll take a look at cable to end off. Okay, so gold, interestingly, is in zone 1 as well. Well, I think that there is a ton of resistance here. I think that gold is really facing a lot of resistance here. Let's keep an eye on the precious metal. Incidentally, it does look as if the daily momentum's above 50. Just want to go down to the weekly chart, and here is the support level that it's operating off. Here is the resistance. Okay, I think that gold, all things considered, is actually doing really well for itself. Let's take a look at pound, and we'll just end off on the cable pair. Okay, where is it in terms of the zone? Well, not surprising, zone 3. So dollar, zone 1, euro, zone 3, cable, zone 3. Okay, gold, that's interesting. Actually performing much better than anticipated. There's just a few others. I know that we said we'll look at pound US dollar. I'll just look at one more. I'll look at the Aussie. The Aussie, the Reserve Bank of Australia held rates overnight, and I think that that they've held it overnight. You can just see that the Aussie's just capitulating. It's dropping all the way into zone 3. If you take a look at an hourly, it's really showing a big movement down to S3, and the stochastic is in the lower quintile. All right, that's as far as we'll go for this morning. If there's any questions, please go ahead and type those in. Tomorrow we will do an extra webinar. We will do the crypto minute. Just waiting to see if there's any questions. All right, just want to reiterate, James, you can certainly use TradingView. You can register for free. You will get access to all the instruments. There are limits. There are limits in how many indicators you can use on the free version, and you'll get pop-ups for ads, but you will have access to all the instruments. All right, guys, let's wrap up here. Have a really good day, good evening, and we shall chat tomorrow morning.